Now, more than ever it seems, we're all looking to cut costs to deal with the current economic situation. With rising energy prices and inflation on goods making the weekly shop seem more expensive every week, it's important to make sure you're keeping your costs in check and getting value for money from what you spend. But what about taxes? It's just another cost, isn't it? And since you can't control whether you get value for money from your taxes, it all comes down to minimizing that cost as much as possible. Why should you pay any more than you really have to when that money could be better spent elsewhere? This is our top 5 tax deductions that you should be making as a self-employed person on your 2022 tax return. Number 1, the trading allowance. Some small self-employed businesses often have very limited expenses, especially if there's someone providing services from home. Did you know that if your expenses are less than £1,000 in any one year, then instead of claiming for your actual expenses, you can claim the trading allowance instead, which is a full £1,000 allowance. So instead of claiming your £100 of actual expenses, for example, you can claim the trading allowance of £1,000 instead, even though you only really spent £100. In this example of a £900 increase, as a basic rate taxpayer, that could be worth as much as a £272 saving in your tax bill. As a higher rate taxpayer, as much as £389. The trading allowance is a fantastic deduction, whereby if your expenses are low, you can effectively increase them for free and cash in on the tax saving. Number 2, working from home. If you do any work from home as a self-employed person, there are 2 ways in which you can claim a tax deduction to reflect this. The first works best if you have a room or an area of the house which is specifically set aside for your business. In this method, you look at the actual costs you incur on your house and then apportion them to reflect the usage that the business is benefiting from. So, what kind of costs should you be considering? Well, you'll have fixed costs such as household insurance, but only where you have business assets which are covered under your household insurance and they're not covered under another business insurance policy. Council tax, mortgage interest, although this is limited to £500 if you record your income and expenditure on the cash basis. Also, be careful, this is mortgage interest only, not the capital repayments on your mortgage. Rent, repairs and maintenance, but only where the expenditure either relates entirely to the area you have set aside for business, or it's a general repair to the house that the business still benefits from. For example, repairs to the roof or painting the exterior of the house. It doesn't include repairs and maintenance to rooms unconnected with the business. Then you have the running costs, such as cleaning, if you have a cleaner who cleans your house, including the business areas, or you may consider cleaning products that you use in your house. Heat, light and power, and metered water charges. You would also normally consider your use of home telephone and broadband in a similar way, but claim this as its own separate item. So you've worked out all of the costs, now it's time to apportion them. How do you do that? Well, you need to look at each cost separately and consider the best way to apportion them between your business and private use. For your fixed costs, you might apportion them by area, say, the area of your house used by the business compared to the total area of the house. For simplicity, you might do this by number of rooms instead, so you don't need to go around the house with a tape measure in every room. With the running costs, you might apportion these by time and usage rather than area, since these are bills that change depending on usage. The key is to be reasonable with your calculation and make sure you can justify the amount you are claiming. Now, if all of that sounds like a lot of work, it is. It can be very beneficial for individuals who primarily do their work from home and who have a lot of home use. But if your home use is much lower, or you simply don't want to go through the hassle of working all of this out, there is another method, which is much simpler. You can claim a flat rate deduction, depending on how many hours of business you work from home in a month. The current rates are displayed here. If your working patterns are different from month to month, you can claim for each month separately to ensure you don't miss out. Also, it can be very easy to think that you don't do much work from home, particularly if you're in a trade that is very site-based, such as a builder, say. But when you think about it, how much time do you spend each month at home writing up the books, researching material prices, preparing estimates and quotes, invoicing, planning your work, advertising your business? It soon adds up. Whichever method you use is a valuable deduction to make and should be on your tax return. Number 3, clothing and laundry. You're allowed to claim a tax deduction for 3 different types of clothing: uniforms, protective clothing you need for work, and costumes for actors or entertainers. Specifically, you cannot claim for everyday clothing, even if you wear it to work. So protective clothing, that's simple. You're looking at specialist clothing designed to be protective. Good examples are specialist toe cap boots, aprons, overalls, high visibility items, goggles, hard hats, you get the idea. Costumes, if you're an actor or entertainer, can be claimed for if they are actually being used for a theatre, film or some other performance. But you cannot claim for clothing that you have purchased to attend an audition in order to give a good impression or a certain look. Uniforms. This is the area where you can maximise your tax deduction if you're clever about the clothing that you wear for work. As we've said, you cannot claim for everyday clothes. So if you wear jeans and a polo shirt to work, you cannot claim for the cost of these since they are everyday clothes. However, if you have the logo of your business stamped or printed on your clothing, then suddenly they are transformed from everyday clothes into a uniform and become tax deductible. You might even argue that if your business was associated with a certain colour and you wore clothes of that particular colour in carrying out your business, they would still be classified as a uniform. You may not be able to do anything about the past if you can't classify your clothing as a uniform. But going forward, when next shopping for clothes that you need for your business, have a think about what you can do to transform everyday clothes from non-tax deductible to tax deductible uniforms. Also, if you have established that you do wear clothing that falls into any of the categories above, uniforms, protective clothing or costumes, you can also claim laundry costs for cleaning these items. There is no flat rate amount here. You'd have to look at how frequently you have to wash them and the costs of doing so. Number 4, training. It's always important not only to stay up to date, but to continuously improve your skills if you want to get better in business. Many trades and professions need to regularly receive training to stay on top of changes in their industries, and the costs of these courses, along with the costs of attending them, are tax deductible. HMRC state that you can claim for training that helps you to improve the skills and knowledge you use in your business, and that the training courses must be related to your business. As such, training courses that also help to develop you personally in relation to how effective you can be in your business will also be tax deductible. At Just One Thing, we're big believers in the importance of continuous personal as well as business development. And so the good news is, if you do some training of a personal nature that you can clearly link to a benefit your business will receive, for example, you can be more effective at work, more organized, you can sell better, then you may be able to claim a deduction for those training costs as well. The closer the link to your business, the more reasonable the claim. However, as a self-employed person, you cannot claim for training courses that help you start a new business or expand into new areas of business, including anything related to your current business. So for an electrician, say, who undertakes some training on basic plumbing so that they can also do small plumbing jobs alongside their electrical work, they cannot claim the costs of the plumbing training, since this would be considered expanding into a new area of business. You have to be careful to make sure any training you undertake is related to your existing business, but as training can sometimes be very expensive, it's a valuable deduction. I hope you're enjoying the video and are discovering some tax deductions you can benefit from. If you are, we'd really appreciate if you could click the like button below. And if you want to see more of our videos, please do hit the subscribe button and the bell icon to be notified whenever we release a new video. It really helps us to know that you like what we're doing and tell YouTube that other people could also benefit from this video. Thank you so much. And now, finally, number 5. Vehicle and travel expenses. If you ever need to travel as part of your work, the chances are that you're going to be able to claim a tax deduction for that travel. The one major exception is that if you have a fixed place of work, an office separate from your home for example, you generally can't claim for travel between home and your office. In a very similar way to claiming for working from home, you can either claim actual costs of travel in your own vehicle, or you can claim a flat rate based upon the number of miles you have traveled. If you're claiming actual costs, then you can claim for such things as vehicle insurance, repairs and servicing, fuel, parking, hire charges, vehicle licensing fees, and breakdown cover. But you will need to apportion the costs between business and private usage, based upon the amount of business miles you drive each year compared to miles driven for personal journeys. When claiming for your own vehicle using actual costs, you may also be able to claim a deduction known as a capital allowance. What you can claim is beyond the scope of this video, as the rules can be quite complex, but we'll put a link down below in the description to HMRC's guidance on this area. If you have an accountant, they will be able to advise you on exactly what you can claim for your vehicle and help you maximise all of your deductions. Instead of using actual costs, you could claim a mileage allowance for business miles in your own vehicle. At present, the rates are 45p a mile for the first 10,000 business miles driven in any tax year, and then 25p per mile thereafter for cars and vans. For motorcycles, it's a flat 24p per mile, and for bicycles, it's 20p per mile. Whichever method you use for your own vehicle, you can also claim other costs of business travel if you incur them, which would include train, bus, air and taxi fares, hotel rooms, meals on overnight business trips. So there you have it, our top 5 tax deductions you should be claiming as a self-employed person on your 2022 tax return. With all of these expenses, keeping good records is key, and you'll always get bigger tax deductions, and so bigger savings, if you record your expenses as you go along throughout the year, rather than leave them until the end and run the risk of missing or forgetting things. I hope this video has been useful and helps you to reduce your tax bill this year. And if you've already filed your tax return and realise you've missed something, don't forget you can still go back in and amend your return to reflect what you've missed, so it's not too late. Thanks for watching. We hope you've enjoyed this video, and remember, sometimes just one thing is all it takes. See you on the next one.